Where are the best places for your money right now? Joining us, Laura Martin, Managing Director, Senior Intranet Analyst at Needham and Company. Laura, you're the media whiz, so I tried to get like the TV show reference in there. Was it directionally correct? I mean, or does it seems like everybody is kind of semi-dating everybody.
I would make a more practical point here. Amazon is the only cloud company that does not tell us they are capacity constrained because they doubled their power over the last 3 years. Google tells us they're capacity constrained. Microsoft tells us. So part of this OpenAI is they do not want to fall behind. So if they can get to NVIDIA chips by using AWS, they are incented to do that real time. And AWS has capacity. So I would say this is a much more practical than long-term view, and that they cannot afford OpenAI. Now, the other thing is, Brian, OpenAI is going to do $20 billion of revenue, and I think they have $1 trillion of commitments. So let's hope they can meet this $38 billion of commitments they just committed to AWS.
You know, the Amazon power story is one we're going to get to with our next guest in just a few minutes, so I don't want to front run that. But let me go back to the word you just said, the H word, hope. I have been told hope is not a strategy. How much do you believe this?
For OpenAI?
For all of it.
So the point I'd make on that, let's just stick with Meta, Amazon, and Google. They are telling us that they are linking revenue to capacity, that when they tell you they're capacity constrained, they're telling you they have excess demand. And you watch Google's margins and also Amazon's, they're going through the roof, which means because of the demand, the over demand, they're raising prices at the speed of light. So we're getting expanding margins. So I believe there is a positive return on capital for every one of these increases in capital spending that they are projecting. The
capital spending numbers continue to go up, and I feel like people can't, it's like every day someone's raising their capital spending estimates on these names. The stocks keep going up. But here's the only downside of that, Laura. I kind of tweeted out that the Mag 7, forget about the Mag 7. We're going to call this the 8 is enough. That's a TV reference for people of a certain age, by the way. Market, because there's 8 stocks that are now about 37% of the entire S&P 500. We've never seen this kind of concentration, at least in modern times. Laura, does that concentration worry you?
So I'm going to go with no, but what I am going to, the implication here is that hurdle rates are rising. In order for the capital market to allocate you capital, you better have revenue growth like CoreWeave did, which is 12 to 300 to 2 billion to 4 billion in 4 years after founding. That's the kind of numbers that the market is assuming these hyperscalers are going to get. And that means if you aren't seeing that kind of growth, it's going to be hard to raise capital in these markets.
Yeah. Is there anything you're seeing, Laura, from Alphabet, from Meta, right? Because your world in media and the hyperscalers sort of overlaps a lot. Is there anything you're seeing or hearing from any of these managements that would imply that that pace of capital spending is in any way close to slowing down?
I mean, I would say yes, because we're hearing their capacity constraint, and Amazon explicitly ties their increases in capital with incremental revenue because they're great businessmen. And I would say we do have media companies like Reddit that are growing 68%. It has nothing to do with generative AI, but they can raise capital and their stock's going up because they're growing at a rate that is commensurate with these generative AI names.
I loved your Reddit note from last week. I'm going to quote Laura Martin, back to Laura Martin, a little light airplane reading as I flew back from the West Coast, your coast, Laura, which was you called Reddit a money-making machine. I know I'm going to do the same thing. It's like the Home Alone. I don't think I've ever heard you, being a very pragmatic person, use that kind of ultimate, very bullish language.
68% revenue growth. They converted 30% into free cash flow. And of the incremental revenue in the 90 days ended September, they converted 80% into free cash flow. I've never seen they've had 6 quarters of over 60% growth, which means whatever multiple you think you're paying, they're doubling their size every 2 quarters. And then they're flowing it all, 80 cent dollars down to the free cash flow in a world where people are spending a ton of CapEx in my hyperscalers, Reddit spends $2 billion, which means everything comes to the shareholder in terms of the earnings. Our earnings went from 16 cents last year to 80 cents.
Wow.
4 quarters later. I mean, a money-making machine. It's amazing. Reddit's doing excellent work on the execution side.